Hello. So it's Friday the 15th of March. I finally had the cast off my elbow. I can get my hand into a position that's not agony and I'm able to get back to work. So I'm very happy. And thank you for your patience. Hope everyone else is doing okay. I'm going to start today with Bitcoin because we've entered a little bit of a price discovery pullback phase. If we look big picture at where we are, here we are sideways at previous highs. Now, if we look at them weekly, we have not been able to close back above this 69,000 level. And at the start of this week, I said we're in a bit of a funny position where the market, even though we're very stretched if we look at these moving averages, is really, really bullish post-halving. If we look at options, expirations, beyond April, there is a real premium on calls. Everyone is expecting it to go higher. And what happens around these levels is that the market makers, the option sellers, are gamma neutral. So as long as we stay sideways in this range, then we'll be fine because they're short effectively. But if we end up breaking out of this range, we could see some extreme volatility. As I said at the start of the week, if we take a look at where we are in Bitcoin, if we look at what Bitcoin volatility, we've had a little bit of a breakout. I'm not loading it there, it's okay. We've had a little bit of a breakout and therefore we are a little bit vulnerable to some nasty sideways moves. And at this point, I think it's a really good idea to reduce leverage. And potentially, you can hedge by buying some puts, but I really do think that we are more likely to see a little bit of sideways. So the key question today is obviously, where are we likely to pull back to in Bitcoin? What would indicate a bigger pullback? And what could we buy instead that would be a little bit of a better investment? Because some things have been doing really well, Solana, etc. Or is there anything that's maybe a good short? So we're going to take a look at those. So first off, here Bitcoin sideways at this important level. When we go down to the daily, you can see that we're holding the 20 moving average, which when we are in a really nice strong trend, normally is really good support. Previous lows, 20 moving average, for me it's like a touchstone. So if we take a look at where we are, here we are not back below that 20 moving average, not back below this previous low where we're likely to see if we see a bigger pullback. And if we take this most recent swing, which is basically the yearly low, then we are also holding the 236 fib from that 24th of January low, which for me, the 236 fib is a little bit of a touchstone. So I think if we were to close back underneath 65,400 on a daily or weekly basis, we are likely to see a bigger pullback to these previous swing lows and that round number 60,000. And if we look at what happened in previous halvings, the halving hasn't always been a turning point. If let's go back, in fact, and look at those halvings. So I am not able to use this. Hold on, here we go. Okay, here we go. There, I was on the wrong page. Sorry, only one hand and not your usual one is quite tricky, but I have got a little bit of use now. If we go back to the halving that we had in 2012, you can see that after the halving, we did have a little bit of a sideways trading and a little bit of a shallow pullback, but then, we saw a really strong move. And one thing, we learnt from quantitative easing after the financial crash of 2008 was the first time they announced quantitative easing and the market didn't really know what to expect. It took a little bit of a time for the market to bottom. But after that, by the time that it was round 2 and round 3, then, if the ECB so much as hinted that it might be on the horizon, the market would just take off, anticipating QE. And I think that we're going to see a little bit of that in Bitcoin as well. In other words, we have really kind of anticipated and priced it in, quite a lot of it in. So we can see in 2016 we made a very nice 3-wave correction and continued higher. at that halving, and then the halving in 2020. Following the halving, which was in May, we had a very nice three-wave correction and then carried on higher. So it may be that we are pricing in our little bit of a three-wave correction a little bit early because markets learn lightning fast. But for me, this is no top. This, even on a weekly, this is not a weekly reversal even candlestick. When I look at a move like this and I look at this candlestick, you know, when you have a big green thrust candle, 50% back of that open close, a close underneath that would suggest a bigger pullback if you're a candlestick trader. And we're really not seeing that at the moment. You know, as I said, we're holding that 20 moving average, we're holding this previous swing low. And I think if we break underneath that, then we are likely to see a retest of 60,000. And honestly, based on previous behavior, that could be a little bit of a gift. So don't be selling, maybe reduce leverage. If you really kind of over leverage, take a little bit of a profit, but I'm not expecting a bigger pullback yet. So short term from here, you know, Bitcoin really kind of loves double tops and topping patterns. And so far, it looks to me like we made a little bit of a three-wave correction back to this 236 fib level. Let me tidy up here. Again, sorry, as you know, I'm having a little hand trouble. Here we go. Let's look at this on the 4 hours. So if we measure from this high to low, project from here, you can see that we haven't on a 4 hour closed underneath this equal measured move level. So for me, the way this equal measured move level works, if we were to close back above this back test of the 61.8 level or back above 69,100, we are likely to see another retest of the highs. And if this is just the first swing of a bigger correction, I would expect this to be 3 waves higher and then another swing lower. So I wouldn't be surprised if it unfolded a little bit like this. However, if we get a really strong move and then a pullback and then a really strong move and the new highs and keep going, obviously that was it. This was the 3-wave correction. It's over and we're on our way up again. And really you don't know until you retest these highs how it's going to work out. But because it's such a big level, because we are coming into the halving, and because quite often in April we have seen bigger pullbacks. Let's look back, for example, at what happens previously in April, May in Bitcoin. Here you can see this high, middle of April. We had a little bit of a pullback that lasted into June. If we look at this high, this is in November, so that doesn't count, but let's look back to the next April. That was quite a major high. We saw a pullback in April 2021 that again lasted till midsummer before we rallied again. And so April, May can be a little bit of a tricky level. Here, beginning of May, we went sideways until the midsummer before we went up again. So I wouldn't be surprised if we saw that pattern. Now that doesn't happen every year. I'm just saying that quite often you can see a little bit of tricky sideways trading April, May time before we continue high. We saw it here. This high here we made was first week of April, and then we made a big 3-wave correction again, bottomed here at May and carried on. So quite often we see a little bit of a correction in April, May. Let's not be surprised if that happens. And if you are one of those people like me that gone, God, I wish I'd bought a bit more, this pullback would be really nice for that. And I would not be, because of this really strong bullish move we've seen, I would not be rushing to sell anything. I would just be more likely to just de-risk a little bit and get ready to buy some more. So let's take a look at what has been doing really well. One of them is ETH, of course, because we're expecting an ETF to be approved for ETH. Let's take a look at where we are in ETH, because we're not trading at new highs. If we put our fib retrace levels on, from the high that we made in November 2021 to the low that we made in June 2022, you can see that we are quite an interesting fib level. And if I go down to the daily, we can see that previously these fib levels have been pretty important. This 236 fib was a really key resistance and then support level. We went sideways and reacted at it every time. When we initially tested this 38.2 fib, it was a double top. So for me, this kind of validates this fib. Even this 50%, when we got above it, it became support. And here, this 61.8, same thing. When we got above it, it became support. We couldn't close back underneath it. So when we traded above this 4,000 level and this 786 fib level, I was looking for it to be support and see if we would continue higher, and we haven't. In fact, what we've done is we've double topped. So I see fibs, you know, as a ladder, support and resistance ladder. So really, I think that the pullback here on a 4-hour would be back to this previous swing low, back to this 3,300 level, and back to this 61.8 level. And because of the way I look at fibs, if we were to close underneath this 3,300 level, I think we would see a bigger pullback to 2,400, which is where our daily 200 moving average is. And you can see we're pretty stretched from the weekly moving averages as well. Also, at the moment, as you know, I look at candlesticks, and more than a 50% close on this most recent weekly open close candle would also suggest a bigger pullback. So for now, there is a bit of a support and resistance level. If we were going to retest the highs, I think this is where we might do it from, because this is kind of where we're at. If we look at this previous swing high, which was at 3,500, and ETH, you know, really likes these round numbers. So I wouldn't be surprised if we did a retest of the highs or a little bit of a double top. Here we are again, just like Bitcoin at the 20 moving average. But in terms of looking for a level to buy, I would prefer to see it back to this 3,300 level. I think it's a little bit clearer, or a kind of clearer three-wave correction. So that's where we are at Bitcoin. Now, one of the ones that has been really outperforming is Solana. Let's take a look at where we are in Solana. Let's go to the weekly. If we look at this, unfortunately, just like ETH, we are, if we look at fib retrace levels, right back at that 61.8 fib level at 168. Now, this is one fib retrace level lower than where we are in ETH. And potentially, you know, when I look at this, I think, well, you know, there is room for it to go higher to this 786 fib level. So I'm going to say that if we hold above this 168 fib level, we're likely to continue higher, and if we do, we're going to keep going to 211, 212 really. However, if we close the day or get underneath this 168 level and it becomes resistance, we are likely to see a bigger pullback to 137. And it depends really, you know, is it all going to come pull back together or not? So 168.37 for me, key support for Solana. Don't want to see a daily close underneath it. Don't want to see it become resistance. That's also, if we look, the very nice hourly 50 moving average. But at the moment, this looks like a very nice three-wave pullback, doesn't it? Wouldn't be surprised if Solana holds this 168 level, that we see 211 next. So still looking pretty constructive to me in Solana. Let's talk about one that's not, which is BSV. So after the ruling against Craig Wright, and he is not Satoshi, let's take a look. If I look at this on the KuCoin chart, you can see at 126, you know, we hit a really important resistance level. We hit the weekly 200 moving average. We're back underneath it, even if we look at it on regular candles. Sorry, I had Heikinashi on there. Let's line this up again. So really, if BSV is going to bottom here, it needs to close back above 126.5. Then I think we will see more upside, and I'd be looking for 253, which would be 50% of this big 5-wave rally. However, staying underneath it, I'm afraid, is pretty bearish, and pretty bearish candlesticks as well. If we look at where we are on a short term, is this a good sell here. If we look at this on the daily, we're holding the daily 50 moving average, which has previously been really important support. It's also a little bit of a three-wave corrective look, isn't it? If we measure from this high to this low, project it from here, this 61.8 level for me is the first support, and if we get underneath 88, we're going to continue lower to 69. So at this point, no, this is not a sell. Actually, this is a level that we're likely to bounce from. And, you know, if we just do three waves up, can't close back above 126, I would expect another swing lower and a bigger sideways chop. But at the moment, 88 potentially, and this daily 50 moving average is support. If we get underneath it, it becomes resistance. Then these previous swing lows here and 69.8 are the next support, and potentially back to the daily 200 moving average at 56 and these bigger swing lows here. So potentially a bounce level for BSV and 88.12 key support. So what's happening in other coins? Are we seeing pullbacks? Are we seeing... Let's take a look at meme coins first. So the first meme coin let's take a look at is Bonk. Now, this is what I mean, you know, when you get back to a key level and you bounce from it, what you don't want to see is a three-wave correction. And if we look here, this is kind of what it looks like. If we look on the 4 hour, looks like a big 1, 2, 3. And if we put our big fibs on the weekly here, from this first swing lower, let's change that, because for me that's a little bit of a resistance level. The 88 pullback is always kind of key, but if we look from where we are, we're at this 50% level, 28.67. On the weekly, we haven't been able to close underneath it. I would suggest here on the daily, if we break down and that level becomes resistance, we're going to see another leg lower with a relationship to this first swing of correction. So this is our first swing of correction, high to low, and this would be our second swing. And the target then would be 21.93. And if we do a big equal measured move level and an 886 retrace, which of course is quite a famous crypto retrace, we are going to come down to 1276. So this would be potentially an interesting sell if this breaks down. However, one of the things about these levels is clearly previously this has been really interesting support and resistance. So I wouldn't be surprised at all if we hold this level and Bonk has maybe, you know, a try it higher. So we can say underneath 28.67, 21.93 next, and potentially 12.76 for Bonk. Now there was some news. This week about Elon Musk and payments using Doge. So let's take a look at Doge and see if Doge is doing any better. Again, let's start at the weekly. Gosh. So when I look at this on the weekly, I have to say we are having a little bit of a pause here. And kind of sideways, we did a swing where this was 1272 of the first swing. But if we look big picture at fib retrace levels from the high that we made in 2021 to the low that we made in 2022, we're underneath that 236 fib, which is pretty interesting support here and then resistance. So as long as Doge stays under 0.212, for me, it's just a bounce in a downtrend. And at the moment, we are on pretty interesting support and resistance. So let's look at where we are in terms of, let's take those fibs away and look at it in terms of where we are as a pullback level. Because if we take from the low lows back in 2022, we're underneath that 236 fib. Even if we measure it from here, because it was a double bottom, we are underneath that 236 fib. So I'm going to say we're not going higher unless we get back above 0.17. And then, of course, we would retest that bigger 236 fib level before we decide if we're going up. If we look lower time frame like Bonk, then all of these meme coins are doing pretty similar. So we've had a big swing lower, followed what looks like a very corrective rally, and so I would expect this swing lower, a corrective rally, and one more swing lower before we're done. Because this first bounce was from the 50% level, we could retest it. That would be my first target, 0.129. But if we get underneath it, I think we could see, a bigger 786 fib, which would be down here to 0.85, or potentially this 61.8 first, 0.111 then, especially if this lines up as the equal measured move, which, no, yeah, 0.111 then. So this would be our second support and daily 50 moving average. In fact, this does mean that here would be my first two targets. So it looks like we're rolling over in Doge. 0.143 then first support, and underneath 0.143 I think 0.112. So more downside to come for Doge, and that's pretty much what the meme coins are doing. Let's take a look at my other favorite sector, which is game coins. Let's take a look at these. So let's take that down. Most of them, when I kind of scan across the charts, either look to me like a lower high, sideways, looking a little bit toppy here, corrective patterns. So even like ones that have done really well are all in a little bit of a correction. Now this Vanry was quite an outperformer for me, and even that, when we look at daily candlesticks, we're in a little bit of a correction. So when I look at this and just want to decide whether I'm going to hang on or we're going to see a bigger pullback or not, I always put the 236 fib on underneath it, 38.2. If we get underneath it, I'm just going to go level to level, and I tend to look lower time frames to see if we got much reaction or whether they line up, and clearly they do. So we're at a little bit of a bounce level in this one, but underneath this 20 moving average, it's not a buy signal for me yet, even in the ones that are outperformers. So here's my second page of my favorite gaming coins, and one of the biggest performers has been Gamercoin, which, when I put fib retrace levels on, we've made a new high. For me, that's a really good sign. So still pretty bullish this one. But where are we in terms of the big retrace 236 fib? Not there yet. So I would say this looks to me like we could continue higher. We've got pretty nice support and resistance at this 0.28 level here, 0.28 to 0.3. So I'm still, without any kind of a reversal signal in GHX, I'm still pretty bullish this one. In terms of daily candlesticks, this is still pretty bullish. And I think that this continues to 0.286 or 0.3, and then we'll see what happens there and what's happening in the broader market. So not all of them are reversing, but not all of them are looking very happy. For example, Beam. On the weekly, if we close here, this is going to be a little bit of a bearish harami, a bearish inside bar. It's bearish because if we close here, we will have closed more than 50% back of the open close of this candle. So if we look at this on the daily, are we going to hold again? This is, it looks pretty ugly, but they're all at potential bounce levels. Like this 236 fib and this daily 20 moving average could be a pretty interesting support level for Beam. So I'm not going to dump Beam unless it loses 0.034, in which case I think we'll see a little bit of a bigger pullback to maybe 0.0285 or maybe 50% to this swing high. I'm a little bit concerned if I measure from this low to this high, project it from the bottom of this three-wave correction. It's a 1272 level. I'd be a little bit more comfortable if it was like a 1.618 or not, or something, but as long as we hold this 0.034, for me, in terms of Fibonacci, we're still in an uptrend. So I'm not going to sell this one if this holds and we turn up higher from here. Also, as well, if we go down a time frame, How would we know if we're going up again? I think we're in a little bit of a descending channel, aren't we? So, not, again, 4-hour 200 moving average, 236 fib, daily 20 moving average. There's a lot to like about potentially this being a level back about above this channel, back above the hourly 200 moving average, looking for a retest of the highs and maybe continue higher in this one. So gaming coins, not quite a lot having pulled back, but not all of them bearish. Even like, let's take a look at this one here, Jewel. Now, I'm gonna move this up. I was looking at it. I'm gonna do this the other way around. So I'm gonna go from this high, from the lows to this high. Go from all-time lows to high. This has made a very nice three-wave correction. We're at the 38.2 fib retrace. We're at the day 4-hour 50 moving average. We are therefore not terribly bearish yet. So, but in terms of daily candlesticks, this does suggest that we could be seeing a little bit of a pullback. But again, as we head into the weekend, I'm going to say that this 0.017 level is a pretty interesting support. Let me try it all the way around. If I take a look, what I'd like to see is this be 50% of this most recent swing. That's kind of my favorite setup. You know, trending markets love to do that kind of 50% retrace. So if we go from the bottom here and look up, right? So let's go down a time frame and see what we did previously in Dual. Trending market, look, very nice 50% retrace, double bottomed here and up we went. If we take a look at the next swing, let's see what we did here. 50% bounce, 50% higher, then we double bottomed at this 61.8 and turned up again. So it kind of does like it. Let's take a look at this again, most recent 5-wave swing we've done. This again, 50% retrace. This is a very interesting level then for dual to bounce. So in all of these coins, although they are looking like potentially we could see bigger pullbacks, this certainly isn't the level to sell. This actually is more likely where we're to see a bounce. Now, if this then from here made a bit of a, you know, 3-wave correction, I would expect a bigger pullback. But for now, perhaps a bounce from here at 0.17. Now, when you bounce from a 50% level, the first target is 50% the other way. So we go from this low to high, because mean reverting markets tend to keep mean reverting. That means that this 50% level here, which would be at 0.0213, would be the first target on a bounce from this level. And if we stay underneath that, it's likely we continue lower. So if we, again, you know, that we tend to do that 50% thing until we break out. So we bounce to the 50%, pull back 50%, and then if we do this, obviously we're going lower. But that's the pattern it tends to follow until it breaks out from that kind of nesting. So that's where we are with gaming coins then. We've had a bit of a shakeout. I certainly don't think we're at a level where I would be selling stuff. I would expect a bounce, and if we just see a 3-wave correction that struggles, I would sell the bounce, not sell the lows. Okay, hope that's useful. Good to be back. Good to be able to move my arms.